Hey, how's it going, everyone? Hello, welcome. Welcome to the PivotBoss Premium Trading Room. I'm Frank Ochoa, aka Pivot Boss. Thank you for joining me today. I'm just going to check out the markets here and basically see how they closed up in relation to the higher time frame charts. And I'm just going to provide some thoughts here, basically, provide some thoughts on the market, where I think price could be headed next week. We'll do some stock scans as well, so I'm going to look through and scan for some opportunities on the stock markets and see what we can find as well. So we'll probably spend about 30 to 45 minutes hanging out here, and then basically I'm going to let you get to your weekend and get to my weekend as well. I'll be I'll be outside barbecuing up a couple of beer can chickens later on this early evening, so that's going to be a lot of fun, and hopefully you got some great plans too. So let's go ahead and take a look at the markets here. Um, Man, we finished up with a solid reversal here after the failure to get above the previous month's close here in the ES, and by the same token here, the NQ failed to establish acceptance above the pre-market high, and that led to some weakness. Crude oil had a significant bout of strength and then eventually closed near the highs of the overall rally. So we had some significant moves today. So I'm going to start with just a look at the ADR here. So a look at the ADR shows that crude oil here traded 153% of its average 10-day range. So over the last 10 sessions, crude has been averaging $1.56 of range per day over a 10-day period. Today we got $2.39, so 150% of average daily range. That's a big time move. Price discovery, expansion day type of move. Big time upside move, okay? By the same token here, the ES had reached its 100% target before RTH even came into play. And then, and from there, price barely pushed to new highs, just a couple of more points or so, not even 2 points, and then failed. And so the range was pretty much in after the overnight move. Same thing can be said of the NQ. The majority of the range was in for after the overnight move, and then from there we saw a big time fade back. So taking a look here just briefly at the ES. Here's a daily time frame of the ES. If you look at last week's PivotBoss Hangout, which was posted, I guess, Monday this week, you'll kind of get the lowdown of what I was thinking last week, right? Which was basically after we saw significant rejection off these lows, we finally reached our major target at 2061. And the initial idea was that if we're going to see rejection down below, then price was going to see a markup in price discovery phase back toward a prior period of acceptance, which is 2061, so that HVN here. That 2061 is basically the micro composite VPOC from this range here and even the range back. So a very important level. But when price trades from rejection back to acceptance, once it gets to acceptance, oftentimes there's a tendency to chop around acceptance because that's what the market wants to do. It wants to trade, and it is happy trading in this price range, be that price range between 2020 and 2070, 2080. That's the current price range where the market is happily doing business. We saw it back here. We saw it again in here. Very, very happy. So that's why we kind of thought that the market would be stuck in the mud here. I thought we'd find a high, then try to get a low, and then all of a sudden build out. So this week was pretty much what we thought it would be, which was mostly stuck in the mud as it tried to get higher and pulled back and all this mess. So not a great eventful week, but I think what it's doing is it's setting up for finding the bottom of this trading range. After you see such a big move up, oftentimes you need to find a high. And once you find that high, you need to snap back until you find a low, at which point you now establish a trading range by which the market can then facilitate trade and find balance. So in this case, what we saw was a price push up above the previous month's high, immediately rejected down. Then price comes up to 61s from below and is rejected down. And then today, price comes into the previous month's close and is rejected down. So this is kind of setting up for a potential push at least into the monthly pivot point, which is 2009. And obviously that has already prior history here because that's where price pulled back to before seeing strength. So I think we could see an early move down next week, and then 2009 is going to be very important. Because if price holds 2009, then I would expect the move to new highs into 77.5 and then establish that range. If price does not hold 2009, then it's going to see further downward price discovery phase until it does find that low and then can establish a range, which could be as low as 1988 and still be considered very bullish. As long as price is above 1941s right now, this is going to be, tilted to the upside in the near term. But at the same time, we talked about these price distributions before, so this is something to keep in mind. Remember these price distributions back here? The market has been very compartmentalized with the way that it's distributing, its volume around these different prices here. Down here, it breaks down and trades down here. It breaks this distribution to the upside and trades in the prior distribution. It breaks it back down and trades down here, now back up. So the expectation is now it's back up, then it's going to create a price distribution. So this is what we're looking for. We're trying to find the edges of the range so that the market can do business. Once we do that, we're likely shifting from the markup phase and the price discovery phase, and now that phase is coming toward an end, and we're likely going into a compression, digestion, type of distribution range that forms. So that's kind of the early idea. And so if we've found a short-term high, and which we did here, then we saw rejection here, then perhaps we open the week with more additional selling pressure early next week, and then we got to find that low and snap it back to value at 2061. So that's going to be the early idea. So whenever I do this, I kind of figure out what do I think the market's likely to do, and then when you start prospecting for opportunities with the stock scans, then you kind of find those opportunities that are in the flow of the general consensus direction, or you can just find opportunities that are in and of themselves good. So we're going to be keeping in mind that we could see an early pullback, but a squeeze. So we're going to be seeing how we fare with finding some of these opportunities on a swing basis. All right, so taking a look at the NQ just briefly here on a higher time frame basis. Big time rejection here and a pullback to 44.50 on the lower time frame. So much higher. Again, it was much easier to call the move in the ES from 1800s all the way to 2061. We had a big, beautiful HVN above. So I kept telling the trading room, and I've been saying it for several weeks now, that that bounce off of 1800s could get us back to the HVN, because that's where the market wants to do business. Now, when you look at the NQ, there's not really that big HVN to shoot for up above. It's not as clearly defined as the ES is. You have this HVN, a couple small ones, right? But the next big area above is still yet to be reached, and that's 46.45 quarter, and that is basically the micro composite VPOC of this range here. And you can see the micro composite VPOC here. So this is the micro composite I put on the chart for this period, and that builds it out, and it shows right there. That's the HVN 46.45, and you can see once price came into that area, it was rejected, then higher low, snapped back to it, chopped around it, then rejected. So I still think that there's more upside perhaps ahead for the NQ with a major, kind of magnet price at 46.45. Now, that doesn't mean we can't pull back first. I think we've seen way too much over bought conditions here with a big squeeze up. That doesn't mean we can't keep going. It's just a sizable pullback may first need to be seen. So 44.40 is going to be very important. That was the area last week where I mentioned that was the last go and the defense for the bulls. That ended up being, in one day, the major move to trade. That level continues to hold. You can see the LVN right here, the CLVN building on the profile. So this is an area where bulls are defending, but here we failed to see a new high and came back and had to rotate lower to see additional buyers come in to defend. So I'm feeling like this could be an early cause for concern for bulls, because it could be a trap here above this 44.40, and so a push back below it could lead to a move back into 43.55 before we see what happens, either a push up or more rotation lower into 4,300. So 44.40 is just the major pivot to watch. I don't know what's happening now. I've been saying this entire time that pullback should be defended for further strength. I think that as long as price remains above 43.55, pullbacks should still consider to be buying opportunities. But this is the major pivot to watch for yourself as this thing goes on, because if the price fails to hold there and you see it come back to it and it can't get above it, that's the level that the bias is currently being set to, is this level. So watch it very closely. All right. With regards to crude oil, here's crude oil in a higher time frame. Now this squeeze was huge, just a significant squeeze, and we've pretty much had this thing nailed pretty well. And as you recall, especially those of you from the trading room, you'll recall here how price got trapped outside of that key range, and from there we were talking about a rotation back here and then back up. And we got that move. We got that move nicely according to this one trapped day. And then once we got into 42.50, we talked about that being a significant level from the prior period of time and how we could see a top there and a rotation back downward. So we got that move and then some. The only place here was that I was looking for some sort of defense here for a potential retest, because we didn't quite get that level at 35.17. When we got this move down, I was calling for 35.17, and it came just shy before it bounced. And, I thought we might come down and really clean that level, and we didn't. Instead, price popped above this previous close, sat on it, and then squeezed any bears that were defending the previous month's close, and that's what you saw here. So just a big time day. Now here's something that I was showing the trading room earlier in the day. We'll jump into the Thinkorswim right now. Okay, here's Thinkorswim. If we take a look at crude oil here in a higher time frame, I find this very interesting right now. And that's basically right here. See that day? That's today. Big time day. And I told you it was 150% of average daily range. And you can look right here. This is the PivotBoss Advanced ADR Indicator. It measures the average daily range for a user-defined period of time, whatever you want. It could be a day, it could be a 3-day period, 5-day period, whatever you want. So what I'm looking at here is that this upper dot right there represents 125% of average range. This lower dot represents 65% of average range. This middle line represents average range for whatever period you're calculating to. Okay, so basically, this is the first time, only twice in the last 2 weeks, twice in the last week or so, where we've seen this happen, and it hasn't been seen since January, which is we saw an overextended day beyond 125% of its average. We have not seen that very often. So today was very unique. Very unique. And as a matter of fact, being below 65% of average range, which is a compression phase, when you see that, you're expecting significant expansion. So if I draw this up here, it points to this small day. You're looking for significant volatility and expansion outside of that range when you see this condition. The converse can be said over here. When you see this condition, typically you may see a blow-off top type of thing, and in which case you may be looking to fade against it in the upcoming period of time. So 40 is very, very important here, I believe. 40 is very important. 39.80 to 40.12 is a very important area of resistance right now. And for example, if you take a look right here, you see how price dropped into this low and then bounced and then saw a huge day here. A huge day that was 125% or greater than average daily range. The next day, look what happened. The next day, we saw a failure to hold above that high, and then price just rolled all the way back against that day. I think that's what we have a potential to see early next week. So the zone's going to be 40, though. That's going to be the level. See, there was a high right into that zone. So if price pops above that area Sunday evening or Monday morning and can't hold above 40 and starts to reject, that could be the early rejection that leads to a move back to the previous month's close price, basically back to 38s. So there could be a two-handle decline coming up for crude oil if prices are rejected at 40. Keep that in mind. There's trapped market participants above that area as well. That's what helped us identify the early sell-off coming, was I talked about these trapped market participants and how price had dropped below it and defended. That's how we thought that we could see a drop to begin with. So now we're back at that line. And if bears are going to continue to defend, this is the level. And so with this major blow-off day looking very similar to what we saw here, one thing to look out for is just 40. If there's a rejection, if price pops above 40 and can't hold, look to fade it to 38 and you got a two-handle move on your hands. And you can do this whether you're trading ETFs or whether you're doing industry groups within crude oil, or maybe you're doing the actual futures contract. One thing to keep in mind if you're a bull and you think that this thing's going to continue, because beyond 40 squeezes, okay? I would keep an eye on 38.65, perhaps down into 38.50. Any push into that zone could be an area where bulls want to defend for a shot at seeing if they can, see further upside price discovery, because so far we've seen higher highs and higher lows day over day, higher highs and higher lows day over day. So an uptrend is intact. So that's going to be the primary driving force for the bulls. So those are a couple of ideas to keep in mind with regards to crude oil. Now, if we take a look at the NQ on a higher time frame, I can change this indicator from 1-1. Let's make it a 5-day range. So here it is. I've changed it to a 5-day range now. So it's a 5-day range right here. Very nice, right? And so what this is measuring is what's the range over the last 5 sessions. So the highest high over the last 5 sessions and lowest low over the last 5 sessions, what's the range? And then it gives me, the calculations. What's the average? What's the, compression or expansion phases? So we're not quite overly compressed just yet, but price is below the midline and has been all week. And so you can see over here too, the last time we got a 5-day range that was super coiled was here. And that was right there. And basically what you're looking for when you get that condition is you're looking for volatility to pick up, and you're looking for expansion, which happened here, right? So it's a squeeze, potential squeeze coming. Here's another period where you got it. You look up here, that's marking this period of tightness, and then you see the squeeze. So that's all we're looking for. And right now we haven't quite met those conditions. We're a little quiet. But still you can tell it's a coiled up period of time. If we drop this down to the last 3 days, then you can see on the last 3 days how prices have fared also. Still below average, but not quite a condition for compression just yet. All right, so there's a few markets here that I wanted to take a look at. I also wanted to look at gold lastly, because gold, I've been talking, I'm kind of starting to shift gears on gold just a little bit here, but some of this trading is something to keep an eye on here. So I think we've had gold pretty much nailed throughout the entire year. So I think if you've been in the premium trading room since the beginning of the year, you know that we'd locked this thing in, even from how the market was going to create a distribution range, right? How it's going to slam up, pull back, and form that range, and then distribute. How prices have been pretty much allergic above 1270s, which has led to rejections. So I mentioned before that 1205, 1202 half was going to be very, very important for this market, because if price can't hold that zone, all of these bulls that are late to the party will then have their downside sell stops run, and then I'm pointing to 1095 as being the downside target if that occurs. If that occurs. So if prices can't hold 1202 half and you fail to hold that zone, all of the sales stops are going to come out from all the bulls that have been defending. If you look at this, it's built out over the last couple of months now, so there's generally a lot of energy that's built into this range. The stops are going to come out one way or another. So this is a zone to watch if the downside stops come out. Now, I did mention before that, currently speaking, there's still a potential to see at least another squeeze up within the range. And I think it's building out nicely right now. You can see that we had been in a downtrending market like this. But what you're starting to see now is a little bit of a rounding off of these prices. And then you see price reestablish itself back above the previous month's close, which is this white dot. Today, prices were defended at that level. And that tells you that prices are looking to perhaps squeeze. It's kind of an early indication here that we could see a squeeze. So what I'm looking for is any push, basically beyond 1245s, gets you a retest back into 1270. And that's going to be the important point to watch out for. because at 1270 and above is where we've seen some significant rejections. So if price squeezes up there and you start to see it waffle again, that could be the point where you can sell it ahead of a potential breakthrough 1202.5 and then maximize your move into 1100 to 1095. So just a few things to think about with regard to the crude. I don't want to flip and say that I'm bearish just yet. I'm giving you the point where that would really come into play, because given the markup phase that we kind of called from this rounded bottom and the retest here, it's been a steady bullish market. So it's still bullish until proven otherwise. And so far, pullbacks have still been defended. It's just these pullbacks haven't been paid. So that's what's starting to get me a little more cautious, thinking that a rotation lower could be seen at some point. But right now, the way it's setting up, we could squeeze right into this 1270, and then that's going to be the decision point, is what's going to happen at that point. All right, so there's a couple of ideas here with regards to crude oil, the ES, the NQ, and also gold. I wanted to get over to some scan list here and just look for some opportunities. So I'm going to flip through and look for some opportunities right now and see what we can find. So basically what I'm doing, and I kind of talk about this every week here, we're trying to make this more of a weekly thing for anybody who wants to hang out for 30 or 45 minutes at the close on a Friday to get some early ideas, because I know a lot of traders like to do weekend homework heading into the upcoming week. This kind of gets you started with that. So, what I'm looking for, generally speaking, is just fluid price activity. Fluid price activity. This one, not so fluid, right? I mean, obviously we've kind of shaken out a little bit, but you don't know what to expect with this one. So this isn't one I'm normally going to be looking at to engage. The scan brought it up, but there's better ways to scan for, better moving stocks, smoother moving stocks. So, but what I'm also looking for is, in addition to a smooth moving stock, I'm also looking for, signs of clear rejection. I'm looking for clear areas of acceptance and rejection in the charts so that we can trade off those zones. The signals we're looking for are signals that are occurring at the extreme of a move, for example, if we're at a trading range market, you want the signals at the top or at the bottom. That's where rejection is, and you're looking to return price to acceptance, right? Reversion to mean. But there's also times when you're in a markup phase, and in a markup phase, you want to buy the pullback, so signals at the pullback zones, buying in the direction of the existing uptrend, for example, is the best thing to do. So those are the kind of things I'm usually looking for when I'm looking at these. For example, right now we have a decent little markup phase, and we're seeing a pullback with a signal here. Generally speaking, that could be a decent buy for a retest of the highs, and perhaps a push into the 25% PivotBoss expansion pivot. But given its history and how crazy it's traded, and how it's unreliable in terms of its smooth, consistent price movement, I'm going to go ahead and pass it. So I just wanted to give you some early ideas here for what I'm looking for, because I may flip through some of these charts rather quickly. Right now, this is a nice smooth moving issue for the most part, and we got expansion to the upside, a pullback, and we're seeing a wick reversal signal form here. So this could be one here to watch out for. As long as price remains above 11 here, this could be a nice opportunity to swing higher into 13.5, perhaps even higher. Not the best opportunity, but not bad. Not bad. Something to keep on the radar here. The early idea would be a pullback into the midpoint of the day's range. The midpoint today, 1217, so a pullback into that area. So if price opens the session Monday above 1217 and drops into 1217, generally between 12 and 1217 is a good zone to look to buy for a shot at slinging this thing higher into 13 and perhaps 13.5. One thing I like to look at, which obviously the week is over, so we could look at monthly pivots, but you can come over here and we can load our ADR method. So for those of you that aren't familiar with ADR, it's my way of calculating average daily range in terms of forecasting accurate targets. So for example, this low right here, that's the low of the month so far. And these targets are your monthly targets based off of average monthly range. So this is looking at a 10-month average. What's the average monthly range on a 10th month basis? So from this low to this third level, that's your 100% target. That's an average month's range. in this stock over the last 10 months. So over the last 10 months, from high to low, it has averaged this many points, which takes you from 1394 to 966. So, basically that's about 4 1/3 points, something like that. And so this would be your 50% target, so that would be midway. And then this would be 75% of the way. That's your primary upside target. So that's your 75% target. This is the one that I consider a primary target. So if you find a low for the month and you think this thing's going to go higher, you'd be looking to play to this target, the 75, and scale at the 50%. And then from there, you look to have trailers to see if you can get farther. That's the primary idea. So right now, the primary upside target for the month is 1287. We're almost there, and it's still early in the month. We're also coming out of a congestion range here. So we saw a rejection, price popped up, we saw absorption, and now we're seeing a squeeze higher. So this could be the beginning of much more strength ahead. And so throughout the rest of the month, you're likely going to see a move at least into 1394 with a shot at seeing a little bit more beyond that. 1501 would be a 125% of expansion. So not bad here. This one's okay. I think we could see more strength out of it. So definitely, if prices hold 11s, I'd be looking for a move into 14 and 15. Now, there was one last week we talked about. There wasn't many opportunities I saw last week. There was a sell, and it was DLNG, and it performed pretty decent throughout the week. But today, this morning, before the market, I was talking about today probably being the day where the thing gives up. And so this is one I was talking about last week. Let's take a look here at signals here. Basically, the reason I saw this one was because we had an overextended market. We got this low and price saw this blow off move up. Then you see our extreme reversal signal, which is a very, very accurate signal that implies weakness coming ahead or additional weakness ahead. We were looking for price to drop into 1042. The idea was to defend a pullback into the midpoint of this range or thereabouts, and so price did. So the midpoint of this range, 1152, price got as high as 1176, so it got a little bit beyond there, a little bit more than you'd probably want. But I talked about the previous high to the midpoint, so it was more of a zone. Into this zone, it got a little bit beyond it, but still okay, and then it pushed downward the rest of the time. And then so price was below there throughout the rest of the week and actually closed below that zone this week only. Once price stops going in your direction, one thing that was very smart on our part a long time ago was creating something that we call the inactivity stop. So we created this algorithm that says, hey, if prices after you're in a position don't really go anywhere after a certain amount of time, the inactivity stop kicks you out. So I program myself basically if you got a nice move in your direction and then price isn't really going after a while, that's probably a sign that this thing is going to actually get a swing move against you. And so, this is one of those scenarios. So not everything is always perfect. I want to show that these are real life examples here where we're looking to fade it, but when price doesn't fulfill its entire move here, it starts to stall out. It's okay to go ahead and ditch that move and move on to the next one that is performing. All right, let's take a look at a couple of more here. That's a big move down. It's a cheap issue right here. This is RJI. Now, what's interesting about this one is just how prices here drop up, and then here's 445, and then that's where it comes back and defends off of. So there can definitely be more strength ahead for this one. Now, I'm not typically one to sit here and suggest a $4 stock to buy all the time, though. So definitely if you're going to watch this one, trade with caution. You have to know what you're doing when you're trading certain things. Low price stocks, whether it's trading options, futures, whatever your market you're trading, just know your market. Let's take a look here at the next one. No, that's okay. This one could be looking at a significant squeeze coming. I like to see, a double bottom or a failed a failed range expansion below a low, and that gives you pretty high odds of a reversal. And then in this case, after the reversal here, we've seen higher lows as this thing has kind of squeezed toward a wedge, an ascending wedge, and is now pushing beyond the top of that wedge with an outside buy signal that's firing. This could easily lead to more of a squeeze higher. This is an LVN as well. So a major LVN around 6s. And so an LVN is going to tell you a couple of things. It's going to tell you rejection. So that's where prices are likely to reject. You see a move here, move here. But when price pushes through an LVN, it's going to reject it by pushing through it as well. It doesn't want to trade it, so it's going to go right through it. And so the stops will just spark a big time momentum move right through it. This is one of those opportunities where you could see that occur. So I'd be watching this one a little bit as well. Again, another cheapie. But if it gets above 6s, I think it easily squeezes into 7 to 725s. All right, let's take a look at, let's see if we got some sell opportunities here. Gonna keep it balanced. Okay, here we go. Sell side opportunities just to keep it up, because we started off our analysis earlier talking about the potential to see a little bit more weakness ahead for the ES and the NQ. So having said that, we can look for some opportunities that kind of support that bias, which means bringing up some sell opportunities. Obviously, there are certain conditions I look for when I'm looking for sell opportunities, which would basically be the inverse of what you look for on a buy side. But generally speaking, I'm looking for sells that are going to be at the top end of a distribution range at a rejection point perhaps, or LVN, and rotate it back down. Or in a downtrending market, you're looking to sell the pullbacks, and get them downward. So in this case, we have been in a downtrending market on a long-term basis, but we're in a pretty strong uptrend here, and now we're firing a signal. So this one's a little against the grain for me, so I'm just going to kind of pass it up and keep on going. So I just wanted to give you a couple of ideas for what I'm looking for and then play on. The other things I'll look for is any times where you see perhaps this right here, where price shoots off in one direction, shoots off down here, and I try to find it at about right here when it's at these lows, because now you're looking to snap it back toward the midpoint, because now you have yourself a key range, and now you can play based off that key range. So I bet you this one, if we put this key range up, it would look really, really nice. And you'd likely be playing right back to the top of that range at 34s here, given the current rejection. So this is one to watch out for. We have a median price here at 37.96, we'll call it 38 evens. So that's going to be something to watch out for early Monday. Rejection at 38s could easily get you going right back into 34s. And then with 34, I mean, you could get right back to value and the previous month's low. Because if you're rejecting at the previous month's close, the expectation is a move against the range into the low. So first major target is going to be 34s on the way down from 38s. And then you could mark this thing downward from there. Additionally, if we bring up the ADR method targets, that'll give us a much better idea of where these downside targets could be. So these are the bull targets. I can double click them and ask it to give me the bear targets. So these are the bear targets. Right now this is looking at the average monthly range. So if we believe that this is the high of the month, which it could or could not be, who knows, and we don't need it to be the high of the entire month, we just need it to be the high while we're in the move toward our targets, right? So here's the high. If we believe that's going to be the high, then your primary bear target is this red one right here. That's your 75% target. That's your second one right there. The third one right here would denote the 100% of range target. So on an average month, if this is the high, on an average month, it can get here without breaking a sweat. And that's going to be about 33.30. So that's what we'll be looking for. It's actually 33.45. So that's an important one. 34.75 is going to be your primary. So if you're looking to enter this trade, if we think that there might be a little bit of a pullback coming because we rejected here, we dropped, and then we came back and rejected some more, then watch 38s and then look to scale early on a new low at 36.05, right? From there, you can keep your original stop of wherever it is. Perhaps if you're using a 2-point stop, for example, you can use, once you get 2 points in the trade, you keep the original 2-point stop, and now you have a complete break-even trade. You're not going to risk any money anymore now that you've reached that first target. And from there, you can take a quarter off at 34.75, and then you can take the last quarter off at 33.45, which is the 100% target. So that's an approach that you can use for you active swing traders or position traders that want to hold on for a couple of weeks. So that's not bad. Let's take a look at another one here. I'm going to flip through a couple of these. As a matter of fact, actually, let me, it's easier to spot this thing when you have some signals here. Look at this downtrending market. We have a clear downtrending market here. Here's the highs right there. We've come right back into, the top of this range. I guess I drew it wrong. And so we could be looking at, some potential rotation downward off this zone. We're starting to see a sell signal develop up here. So this could be a little rotation candidate. I'm going to hold off, though, on that one. I'm just going to keep on going and see if I can find something a little better. While I'm searching for some of this, for those of you who are Masters members that are joining me now, I'll be doing a big announcement tomorrow morning. If you want to join me tomorrow morning at 10 a.m. Central Time, so 10 a.m. Central. And even if you're not a Masters member, you can join as well, and you can kind of see what we're talking about, because if you want to be a part of it, of the news, then there's a great opportunity for you to do so. So if you want to join me tomorrow morning, it'll be 10 a.m. And you can use the same link that you used to be in this meeting right here. So use the PivotBoss link. So join me //PivotBoss, and that'll get you right into this room again at 10 a.m. tomorrow. And I won't take much of your time. It'll be a 30-minute announcement where I'll probably announce it for about 15 to 20 minutes and then take your questions for about 10 or 15 minutes, and then we'll call it a day. If you can't make it tomorrow morning, no problems. I'm going to do another one of these announcements next Wednesday during lunch hours. So around noon Central Time next Wednesday, we'll also do a different one for those of you that couldn't join live tomorrow. There'll be another one ahead, so don't worry. But this is a pretty exciting announcement, and if you like what we do here at PivotBoss, then you're definitely going to want to see what this is about, because if you're a Masters member, you're going to be in hog heaven, and if you're not a Masters member, then this is definitely going to be the time. So to want to be a part of it. I will be recording it. I will be recording it tomorrow. But again, it's always nice to attend these things live, because you get your questions answered. You get to be part of the excitement and the initial buzz of it. But I do want to record it just for those of you that are not able to attend it. And again, I will be doing two of these. So some of you wanted to be a part of Saturday. Some of you wanted to be a part of the Wednesday lunchtime one. And you can be part of both of them if you want to. So I just wanted to put that out there. Use this link, and you'll be able to get a part of that information, which is going to be pretty awesome. So right here, I'm just looking at this GBX. GBX, not bad. We have a nice little rejection tail here. You can see the signal. You can see the big the buy signal down here that sparked the initial rally. This is what I would call an impulse range. I would call this an impulse move, the initial impulse move, right? And this is the move that the market, it's a market-generated move that helps to set the tone for the market's trading range, or where the market's going to do business, basically. And so for getting this low, rallying up to this high, and you see this big, wide range of movement compared to average, because look at it, average, it's not that much of a big mover. It has some swings in it, though. And you can see right here that price traded well beyond the 125% of average range. That tells you have a big time overextended move. So what I'd like to do with these opportunities is mark the range from high to low and get the midpoint of that range. And from that midpoint, I can now look to trade a rejection back to and fade it back to the midpoint from recent highs. So this is a great opportunity here for the upcoming week where we could see a nice fade back toward the midpoint of the range. Let's see here. This is the current week here. I'm going to change these pivots to weekly pivots. There we go. And so I can, what's great about these Thinkorswim pivots, the way that it's done is that it'll actually forecast you the upcoming week's pivots too. So here's the current week's high, here's the current week's low. These are the forecasted PivotBoss pivots for the upcoming week. And basically the midpoint of that range is the bottom, is also the bottom of the weekly pivot range. So I know that right here that this high, that low, here's the midpoint. So if we're looking to fade this using our methodology, the primary idea right now is because the price closed the day below the midpoint of the session, and there's a wick reversal sell signal. By the way, this sell signal right there is from my book, Secrets of a Pivot Boss. So if you're familiar with my book, this is the one from Secrets of a Pivot Boss, and what I teach you is that this signal, however simple it may look, there's a lot going into the calculations, measuring many different parts of it that gives you a high opportunity that this could be a fade, especially when you confirm it at specific key levels. You know, if there's a significant reason why you're seeing that rejection, or there's multi-correlated pivots that line up with that area, you know, those are the best opportunities to trade. In this case, there's been a big time move up. So price found that low and kept going till it found a high, and now it's snapping back. The primary idea is 30.76. Look to fade 30.76 and bring it back toward the midpoint of the previous week's range. That's going to be 27.92. So that's going to be an opportunity you can look to trade in the upcoming week. But one thing to keep in mind is price closed the week here, 30.3. So the upcoming, on Monday, you want price to open below this 30.76. So you want it to open somewhere in here or down here. And then if price rallies into 30.76, you want to see it start to see some weakness, at which point you can look to sell it. And then depending upon how big your stop is, everybody's stops are differently and they like to use a different stop. Say for example, we use a stop above the high. So if you're looking at 30.76 and your stop above the high, here's 56, so just call it 66 will be 10 points grace. I mean, you know, that's a 90 tick stop, right? So a 90, that's 3% there on a $30 stock. So if price goes 90 ticks in your favor, that's going to be 29.86. So when price gets down to 29.86, you want to take half of that trade off. So whenever you get filled, when price hits 29.86, take half off, plus 90. So take those plus 90 ticks. And now your original stop up here at minus 90 ticks now becomes a break-even stop. So now price has to go from this 29.86 and go all the way up here to get you out at break-even. Okay? That's how you do a break-even trade. Instead of the converse, which could be, for example, get in short here, trade it down, yay, we made it to 29.86. I'm going to move my stop from here to here. And so then when price comes up here, yeah, that's a break-even trade, but now you're not in a trade. You're out, right? So it's just math. It's just a different way of doing business. If you do it the original way that I talked about, then if price comes back to the entry, you're not out. You're actually still making money because you already took some off the table, right? And so price still has to come way up here and work extra hard to get you out at break even. Instead, if price comes down here and you get out half, when it comes back to your entry, you could be looking to defend and add back a quarter. So it gives you more flexibility instead. So this is an opportunity you can check out. 30.76. We'll see how it opens up next week. If price opens up here, then obviously the trade's over, right? You don't have to enter that trade. So if price gaps up for some weird reason and gaps back above, the 31s here, then I'm not looking to sell that again unless there's another sign of rejection. So just keep that in mind. So that's a decent opportunity there to watch out for next week. And we'll see if we have a little bit more here. If not, this is a pretty decent one. I don't want to keep you much longer here. But this is a good one here. This is KANG. You can see there's been a very clear balanced trading range that is formed. 18 half, 19s, all the way up to 22s to 2260s. Very clear trading range that is developed here. And then we saw a push to a new high, barely a new high beyond this high, and rejected back down. We see our sell signal coming up right now, so there's the sell. So in the very same token here, again, the idea of the market is to trade from rejection back to acceptance, and then back to rejection, and then back to acceptance. It's the natural rhythm of the market. And so that's why you form these balanced ranges, right? You know, it kind of looks like that right now, or that's not even right. Kind of looks like this. So, you know, you're looking at that as your range. So if this is rejection up here, you take it back to acceptance here. That's your primary idea as traders. 2222 can be a great area to look for a defense, and then you return it back to 5-day VPOC. 5-day VPOC, oops, kind of zoomed in a little bit too much, is 2087. So we could be looking at a move from 2220 back to 2087 at the very least, and then perhaps a move against the range to the other side of rejection. So, you know, at the very least here, 2220, given the recent rejection up here, could offer a move right back to this area, 2086, 2087, with a shot at rotating into 20s or even below. But by the time you're down here, you want to be on your last legs. You want to be giving up those last legs. So whatever your stop is up here, equidistant, that's your first half trade takeoff. Then you're looking to take a quarter off here and perhaps another quarter down here. So that's the idea for this trade. Not bad. All right, that's going to pretty much do it here for today. We got some pretty good opportunities to look out for. As we head into the weekend, we kind of got a little bit of an idea with the higher time frames as well with regards to the ES, the NQ, gold, and crude oil. So a little bit to take with us here as we head into the weekend. Again, if you want to join me tomorrow, you can go to pivotboss.com right here, and I'm going to post a link as well. But this is a spot where you can get all the news. So any one of these links, if you click on, for example, I'm going to post this this hangout. I'll post it up to the website here, and whenever you click it, there'll be a link. So for example, whenever you click any of these links, you can come down here to the side, and actually it's not there anymore. Well, my Twitter feed is on here somewhere, and the Twitter feed always has the latest news and links, but I'm also going to post it as well, and this is where you'll be able to come check out some more information. What I am going to do also is make that announcement tomorrow morning. That's going to be 10 a.m. So 10 a.m. tomorrow morning, Central Time. I won't take much of your time. It's going to be an exciting announcement for those of you who are PivotBoss Masters members. So this is a great meeting for members to come out, see what's coming up in the latter half of April and also into May. And for those of you who are not PivotBoss Masters members, this is going to be a fantastic opportunity for those of you who are thinking about it, because this is going to be a great time. It's great timing if you're thinking about it. So something to check out tomorrow morning, 10 a.m. And again, if you can't make it, no worries. I'm going to record it, but I'm also going to do another live one next Wednesday. And then next Friday, we'll do another PivotBoss Hangout like this one and see if we can find some opportunities in the market for the week after. So a lot of great stuff to come. And again, I always appreciate your time, so thank you. Thank you, and you're welcome. To you saying thank you. But all of you, thanks a lot for your time. Have a fantastic weekend. Do something you love. I'm about to put a couple of beer can chickens on the pit outside on the cooker, some roasted corn and some other goodies for some guests tonight. So it's going to be a lot of fun. So hopefully you have a great evening. Have a fantastic weekend, and I'll see you tomorrow morning. Take care, and I'll see you soon.